Good morning, student. Today I am going to teach you journal proper, or we can say that general journal. This is the part of subsidiary book. Student, in my previous video I have explained many things about subsidiary book. Under subsidiary book I have explained purchase book, sales book, purchase return book and sales return book. So today you will understand that what is journal proper and what will be journal entry related to this, and what is the characteristics features of journal proper. So after the subdivision of journal into various subsidiary book, journal remains only a residuary book in which only those transactions are recorded which can not be recorded in any other subsidiary book. Any other subsidiary book means here purchase book, purchase sales book, purchase return book and sales return book. In such a case, journal is called journal proper. For example, if machinery is purchased on credit, it can neither be recorded in cash book nor in purchase book. The reason is that cash book record only the cash transactions and purchase book record only credit purchase of goods and not the purchase of an assets. The purchase book of machinery, which is an assets, will thus be recorded in the journal proper only. The following steps of transactions are recorded in journal proper. First, maybe opening entry. Opening entry means this entry is passed to bring the closing balance of various assets and liabilities and capital appearing in the balance sheet of previous accounting year to the books of current accounting year. Means you have also read the journal entry for opening entry in chapter of journal. Second is closing entry. At the end of the accounting period, a trading and profit and loss account has to be prepared to ascertain the net profit. For this purpose, the nominal account have to be closed by transferring their balances to his account. The entries passed for his purpose are called closing entry. Third point is transfer entry. Transfer entries means an amount or the balance of one account to another account, such as transferring the balance of drawing account to capital account. So this entry is also included in journal proper only. Fourth point is adjustment entry. Adjustment entries at the time of preparation of final account. Entries are needed to record certain unrecorded items such as closing stock, outstanding expenses, prepaid expenses, depreciation on fixed assets, interest on capital, interest on drawings, etc. Entries for these are called adjustment entry. So it will also not recorded in subsidiary book, that is purchase book or sales book. It will only record in journal proper. Now fifth point is rectifying entry. Rectifying entries is the refer to rectify the errors while journalizing, posting, totaling and balancing etc. So rectifying entry will also record in journal proper only. Now some miscellaneous entries. Miscellaneous entries include all the entries which are not recorded in purchase book, sales book and opening, which is not related to opening entry, closing entry etc. So example may be purchase of an assets on credit. This will come under the miscellaneous entry. B point, sale of an assets on credit. Next point may be writing of bad debt. Next point is bills payable issued. Bill receivable received. Goods taken by proprietor for personal use. Goods given away as charity. So we can say many example of miscellaneous entries. Suppose abnormal loss of a stock or other asset by fire, accident, theft, etc. are include in miscellaneous entries, dishonor of bill receivable, endorsement of bill receivable to a creditor, discount allowed and discount received also include under miscellaneous entries. So many things are comes under miscellaneous entries. Now, what will be journal entry? Journal entry in journal proper. So we can say that journal proper is nothing except journal entries. Only we will do the journal entry for journal proper. So suppose an old machinery was sold, journal proper. We will draw a format of journal in this case also, as same we have done in journal entry. This is the column of journal proper, date, particulars, LF, rupees DR side and rupees CR side. Suppose an old machinery was sold to Kailash for 10,000 on credit. Then journal entry will be Kailash account DR to machinery account. $10,000 and 10,000. If I sold machinery for cash, then it will not record in journal proper because it will record in cash book. So cash book is the part of subsidiary book and journal proper is also part of subsidiary book. When we sold goods on credit, then it will record in sales book. When we purchase goods on credit, then it will record in purchase book. And when I purchase machinery on credit, then it will record in journal proper because it will neither record in purchase book or cash book because it is also credit. So when an asset purchase or sell, it will record in journal proper. When any asset depreciated, it will record in journal proper. Suppose, next example, Sunil, who owed us 50,000, was declared insolvent and 40% is received as full and final payment. Then 40% amount will record in cash book because cash is coming, and 60% amount will written off as bad debt. So 60% amount only goes in journal proper, and I will do journal entry in journal proper bad debts account DR to Sunil's account. 30,000 because Sunil have lent me 50,000, but he paid 40%, and 40% of 50,000 will be 20,000. So cash is receiving here 20,000 and it will record in cash book, and remaining balance 30,000, that means 60% of 50,000 is our loss and it will record in journal proper. See some other example. Suppose next example is proprietor withdrew for personal use cash rupees 10,000 and goods rupees 4,000. Then when cash withdrew by proprietor 10,000 and goods withdrew by proprietor 4,000, cash is going from business. So cash transaction will record in cash book. But goods is going from business, so it will record in journal proper. We cannot record in purchase book because I am not selling the good, I am not purchasing the goods or not selling the goods. Goods is used by proprietor for personal use, so in transaction when it is given goods proprietor withdrew for personal use cash rupees 10,000 and goods rupees 4,000, then it will record in 4,000 only in journal proper. Journal entry will be drawings account DR to purchase account 4,000 and 10,000 will record in cash book. So this is the solution of the transaction. Now I am showing you one example related to journal proper or other subsidiary book. Suppose wages outstanding, it will record in journal proper. Suppose salary paid, it will record in cash book. Suppose goods purchased on credit, it will record in purchase book. Suppose goods sold on credit, it will record in sales book. Suppose goods returned from customer, it will record in sales book, sales return book. And when we goods return to supplier, then it will record in purchase book. So now I am going to show you one question related to all the subsidiary books. So let us see the question. Student, this is the question. Question is saying, enter the following transactions of Kumar brothers in appropriate subsidiary books. Inappropriate subsidiary books means here where it will record. Question is asking in which subsidiary book it will record. For first transaction, January 1st, assets, cash in hand, 5,400, due from Balaji and company 7,000, due from Manoj rupees 20,000, stock 80,000, and furniture is given 25,000 in asset side. And we all know about opening entry. Opening entry will record in journal proper, but cash in hand is also given, so cash in hand will record in cash book as to balance BD in debit side. So I will record it in cash book. Cash book is the also part of subsidiary book. These are the part of subsidiary book. You can see that purchase book, sales book, purchase return book, sales return book, journal proper, and cash book. So cash in hand will record in cash book to balance BD, and same we have bank overdraft, so it will also record in credit side of cash book, bank in bank column, and remaining item which is left as debtor, stock, furniture, it will record in journal proper as we have done in opening entry. So second transaction is saying purchase from Ramlal and Sons 10 chest of tea at the rate of 720 each less 10% trade discount. So purchase on credit, it will record in purchase book. Next transaction is purchase from Ghanshyam Das and company 20 tins of coffee at the rate of 480 each less 5% trade discount. Half the payment is made in cash and half by check. So this is not a credit transaction, this is cash transaction, because half payment is made in cash and half payment by check. So it will record in cash book only in credit side. Now next transaction is purchase machinery for 10,000 from Pramod and company on credit, and this is not a goods, machinery is an assets, so it will record in journal proper only. We will write machine account DR to Pramod and company account. Transaction number 8, received cash from Balaji and company 6,800 in full settlement of their accounts. So it will record in cash book only in debit side, because cash is coming in my business. Next is deposit into bank. In this transaction also cash is going and in also deposited in bank. So bank account will be debit and cash account will be credit, and it will record in cash book only. Next is sold to Sen and company goods as follows: 4 chests of tea at the rate of 950 each, 12 tin of coffee at the rate of 7 each. So this is a credit sale and it will record in sales book. I will record it in sales book. Now return to Ramlal and Son 1 chest of tea. So when I will return to my supplier to Ramlal and Company, because I have purchased from Ramlal and Company, so it will record in purchase return book. Purchase return book. Now next point is sold to Ravi Shankar 20 chest of tea at the rate of 100 each, less 10%, 5% trade discount. Then we can say it will record in sales book. Now next point is Ravi Shankar accepted a bill for 1 month for the amount due from him. So it will record in journal proper. Now next point 18 Jan is paid for wages 500 and stationery 200. Cash is going in this transaction, so it will record in cash book only. Now next transaction is on 20 Jan received a check of 10,000 from Sen and Company. The check is immediately deposited into bank. Now when we check received from any person and immediately deposit into bank, it will record in cash book. We all know about it. We have read cash book also in previous chapter. Now next point, next transaction is on 21st Jan. Purchase from Vijay and Company 20 chest of tea at the rate of 800 each and 5 tins of coffee at the rate of 500 each. So purchase from Vijay is a credit transaction. So when we purchase goods, it will record in purchase book. Now on Jan 22, 2 chests of tea costing 700 each are taken by Mr. S. Kumar for his personal use. So when we withdrew goods from business for personal use, it is treated as drawing. So drawing should be recorded in journal proper, as we have explained in my previous topic. Now student, on 24th Jan, return to Vijay and Company 2 chests of tea and 1 tins of coffee. So it will record in purchase return book, because we have returned to Vijay and Company. Next is on 25th Jan, acceptance given to Vijay and Company for 2 months for the amount due to them. So it will now recorded in journal proper only. Now next point is acceptance received from Sen and Company for 2,200 for 30 days. So it will also record in journal proper. Now withdrew from bank for personal use rupees 400 and office use 6,000. So when we will withdraw from bank for personal use, cash is going from my bank as drawing, and for office use, cash is coming in my business from bank. So it will fully record in cash book. We all know about this transaction because we have read in cash book such type of transaction. And last, on 30 Jan paid rent by check rupees 4,000. So it will record in cash book in credit side. I will record in cash book. So many items are recorded in cash book. Many items are recorded in journal proper from one question only. So you have to distribute all the transactions given in this question. So, and you will prepare in one time purchase book, sales book, purchase return book, sales return book. First, you have to prepare format of all these subsidiary books. Then you have to put one by one transaction where it will shifted, and then answer will come. So I hope that you will understand, and if any doubt you will ask in my next class on MS Team, and you can see answer also of this question. So see, first book is here cash book. In this question, cash and bank column also given, transaction cash and bank transaction also given. So I have prepared double column cash book, and those transaction which is related to cash book, it will shifted either in debit or in credit side of cash book. And next is also prepared in this question. See more solution. Purchase book has been also prepared, sales book, purchase return books, and sales return book. And at last, journal proper and general journal is also maintained by this book. So you have to draw first format of all these subsidiary book. This is purchase book, sales book, purchase return book, sales return book, per journal proper, and cash book. So this is your homework. Also you have to send it by evening. Thank you very much.